Hey, with all the news hitting us from Baltimore to Israel, from Trump to Biden, it's hard to notice that the one thing that moves the stock market, and that's earnings, is coming up right now. Today, I want to do a deep dive into the top stocks coming into earnings reports over the next few weeks and how to find the expected range of the stock in its earnings report. So let's get going. Hey folks, Tom Gentile here. One look at Main Street Media can quickly slide you into a bias, depending on the channel you watch. So, switching from, say, Fox News to CNN could have you switching political candidates if you believe everything you hear. Some news outlets are focusing less on geopolitical events like Russia and Ukraine and more on Iran and Israel. What they're doing, obviously, is trying to find out what sticks the best. The same's true in the stock market if you're not careful. Earnings will become front and center very soon, with the Mag 7 releasing shortly. And who's to say opinions won't sway you on the bullish or bearish sides here either? Now, I tend to focus on the data and not the opinions of others. Data is real, data is hard, and it's unchangeable. And unlike opinions, patterns can be found in the data. So, first thing I want to show you is a chart of the top 10 most expensive optionables coming up here right now. So in this list, each of these stocks has a set of numbers after the corresponding symbol. The first column is the highest the implied volatility has been in the year. So think of that as the most expensive these options have been this year. The second column is the lowest implied volatility and how cheap those bulls have been for the year. And the last column is where we currently are for each symbol. So upon glancing at the stock's high and current, you can safely say these 10 symbols are making new highs in option premiums over the last year. That means, in my opinion, there's a lot of nervous option traders out there when it comes to these 10 symbols. Now, something else you might see, 7 of them are check marked. That's because the 3 unchecked are not companies, they're ETFs, and they all involve the gold market. So gold's recently been making new all-time highs, and it looks like option traders are betting for higher volatility in the yellow metal in the coming weeks. But I want to focus on the other 7. Now, these other 7 are stocks, and it's my bet that the majority of them have earnings coming out within days or weeks. So let's take a look at a few. First, UAL. This is United Continental. Now, UAL had their last earnings report, and at the time, their stock was at year-to-date lows. They reported better than expected earnings. This quarter, the options volatility is even higher. Look at the black line rising up. So expect a move with AOL that's between $37 to $43 once they release their earnings report. That's about 8% of the stock price either way. Now, there's a simple formula you can do to get the range of any stock after earnings. You take the at-the-money call and the at-the-money put premiums, and you add them together. So what expiration date do you use? Use the closest expiration date that comes just after the earnings report. So in this case, you take the April 19th, 40 calls and puts, add those together. That gives you about 6 points total. That's how I came up with the range that it just gave you. Next up, IBM. Now, IBM beat its last 2 earnings reports, sending the stock up about 20% since then. Volatility is the highest it's been in a year, so expect the earnings report due out on April 24th to push the stock up or down by 12 points either way. That's what the option traders are telling us right now. This way, we could come to this expectation. It's no different than what I just did. Again, you take the April 26th at-the-money calls and at-the-money puts, and you add them together. Finally, there's American Express. So American Express announces their earnings release on April 19th. That's later this week. Look at that IV and look how much it shot up here just in the last couple weeks. Now, that's already up about 20% higher than it was last quarter. This would push the stock up or down based on that simple calculation I gave you, about 12 points either way. Now, here's the real pattern with AXP. In 3 of the last 4 quarters, AXP has gone up in price the week prior to earnings report. That means buying the AXP calls a week before the earnings report puts money in the option trader's pocket without the risk of staying in the option through earnings. So what's our takeaway this week? Well, earnings will become front news eventually. You also now have a list of what's likely to move around here in the next few weeks just after earnings and the way to project the move post earnings using options. And finally, I gave you a pattern we spotted in AXP, mostly a bullish pattern. So let's forget about the opinions of the pundits and the analysts on mainstream. You're a rules-based trader. You already are 98% ahead of all the other traders out there. I'll see you next week.